In this video, I'm going to share with you 5 top reasons why I think you should invest in commercial property. Once you've heard these reasons, I am pretty sure you're going to be seriously thinking about finding and buying commercial properties. Right now, where we are with the economic climate and coronavirus, a lot of people are working from home, as you know, and it's predicted by some that the new normal will be that more people will be working from home. What does that mean to the world of commercial property? Well, in my experience, what I've seen is there's a lot more commercial property on sale right now, and it's being reduced in terms of price. To give you an example, one of my clients recently, as in last week, bought a property which had been on sale, and through this one phone call, the seller dropped the price by 25%. Bang. And that usually is unheard of. You mean you have a negotiation and they might drop the price by 5-10%, maybe 15% if it's been on for quite a while, but generally speaking 25% first offer, and they said yep, we'll accept it. So the point I'm trying to make to you is that commercial properties right now you can buy at really good prices, really good deals, and therefore I think you should be focusing on that a lot, especially those type of properties which were linked to retail, hospitality, leisure, and those businesses which have either shut down or might be shutting down. That's a good opportunity for you. Office space, businesses working from home, some of them I've seen have put their property on sale simply because they're saying we're saving anywhere from say 50 grand to 100 grand and more, depending on the size of the property and how many employees they have. What's the point of having all of this? We might as well have additional software we subscribe to enable people to work from home. Therefore we don't need all the overhead of having an office and repairs, maintenance, a mortgage if they have a loan on it, and business rates and everything else. It just isn't worth it. So people now, having seen there's a different way to work because they've been forced to do that, are thinking this works really well. And for some of those businesses, productivities are higher, so they're thinking people are working better from home, so let's carry on doing this. And that could be the new normal for quite a few people. And as time progresses and government support reduces, especially after April with furlough coming to an end, there might be a squeeze on certain businesses who will struggle financially, so they might be forced not to have an office and carry on working from home. So that's going to create an even bigger opportunity for people like you and me who are looking to buy commercial properties. So that's the first reason why I think you should seriously consider looking at commercial properties. There's good deals to be had. Secondly, generally speaking, commercial property ends up being cheaper than residential property. The price per square foot for residential is like 2 to 3 times as much as commercial space. The example I've just given you of my client who's bought a property at a 25% discount, the price per square foot on that property worked out to be something like £36 per square foot. Now if they are to convert it into residential and then sell it, once they've converted it, the price per square foot is going to increase considerably even after having done the refurb. So there's a huge margin there in terms of the profit they're going to make, and if they don't sell it, they hold on to the properties, refinance, pull all their money out, and then rent those properties out to tenants. They're going to create immediate cash flow by being able to cover the loan plus additional cash flow for them. So if you're looking at conversions, that works well. But if you're just looking to own property, still commercial property is going to be cheaper per square foot. Again, I'm generalizing because obviously there's different areas. If you've got certain business parks or certain areas in a particular town or city where there's huge demand, those properties are pretty expensive or not as lucrative. But if you look around a particular city, there are pockets of areas which aren't the down and out areas, by the way, are pretty good areas, some of them industrial areas, but commercial property there is selling for a really good price. Like I've said to you, I did a check test before I started this video, and there's more properties on sale right now in Peterborough where I am than they were 6 months ago, and more now than they were also 9 to 12 months ago, because more properties are vacant, and therefore there's more supply out there. So that's the second reason why you should look at commercial property. The third one, which is a popular reason why people buy commercial property, is you can have long-term leases. So with a residential property, you've got assured short-hold tenancies for 6 months, and then the tenant may want to leave, so then you have a void period, and it might take you a month or two to find a new tenant. So those void periods mean lack of cash flow for you. Whereas if you have a lease of, let's say, 10 years, you know that that tenant will carry on paying you for the next 10 years as long as they continue trading. Within that, of course, you have rent reviews every, say, 3 or 5 years, so there's rent increases to be had as well, and generally speaking, in my experience, commercial tenants tend to pay their rent on time. Overall, of course, there's hiccups and there's issues, especially with COVID, but generally speaking, people are running a business. The last thing they want to do is not pay their rent and upset their landlord and break the covenants or terms of a lease. So good regular cash flow, especially if you can get somebody to take it out on a lease. Fourth one is, if you own a residential property, you've got the challenges of repairs and maintenance, and if people leave, there's always some repairs to do. Whereas with commercial property, you can have an FRI lease, full repairing and insuring lease, which means the tenant pays for all the repairs and maintenance, and when they take the lease, you assign your costs, the legal costs for the lease, to them too. So pretty much it's not costing you anything whatsoever. You don't have to worry about the upkeep of the property and the boiler breaking down and the taps not working and the door locks broken, all that type of stuff isn't going to be your headache. You just pass that on to the tenant, and it's for them to look after, and you'll have minimal involvement because they'll pretty much look after the whole thing. They've got a business there, they want to make it look good, they also want to make sure it's operational. They don't want broken windows and broken door handles and all that type of stuff. They're going to fix that. The fifth one, which kind of doesn't work right now as much, up until obviously the 31st of March this year, but stamp duty is lower on commercial property than it is on residential property, because the tiers for residential property in terms of the amount of stamp duty you pay increase quite quickly, and once you get over 1.5 million on a residential property, you're paying 12% SDLT on anything above, and of course if it's your second or additional property, you're then paying the additional 3% SDLT too. Whereas a commercial property, on the first £150,000 no SDLT, the next £100,000, which gets you to 250,000, you pay 2% SDLT, and then anything above and beyond that you pay 5% stamp duty, land tax. So generally speaking, you'll end up paying less SDLT on commercial property, which gives you a cash flow advantage. So you've got two options: you can keep the commercial property, long-term lease, rent coming in, which creates cash flow and capital appreciation, or your other option, which I prefer, commercial property, convert it either through PD rights or by obtaining planning into residential, and then you increase, there's an uplift in profit, and then of course you can rent those properties out or sell them. If you sell them, you've then got to pay tax, either personal income tax if you buy them in your own name, although I recommend you use a corporate wrapper, i.e. an SPV, a limited company. Then you pay 19% corporation tax, the rest of the money stays in the company. As long as you don't draw the funds down or out, you can then reinvest those into the next deal. That depends on your personal circumstances and how much money you need personally. And if you don't sell the properties, you then refinance. There's no corporation tax to pay anyway because you've not made a profit. All you do is get the refinance the property and then rent the unit separately. Rent comes in, pays the finance costs, and then of course any of the repairs and maintenance at some point in the future, insurance and all that type of stuff. Although in the first couple of years you shouldn't have that much in terms of repairs and maintenance, because you've just refurbished the property. It's going to be pretty nice, neat and tidy, and you've got cash flow coming in every single month. I think that's just a fantastic way of running a property business.